All right, welcome to the deep dive. Today we're going deep on, Starbucks.
The coffee giant.
Yeah, you got it. But we're not just, rehashing their history or anything. We're going for that real nitty-gritty stuff. What made them tick? What can we all learn from their journey? Especially if you're, out there building something of your own.
Right, exactly. We're zeroing in on the lessons any business builder can use, no matter what you're creating.
Yeah, and the source for all this juicy insight is, well, Howard Schultz himself.
We're pulling from a great Acquired episode where he really opens up about, building Starbucks from the ground up.
Really rich stuff. And what's interesting is this deep dive feels even more timely now. Starbucks has had, let's say, an eventful couple of years, right?
Yeah.
Sales fluctuations, stock dips, that whole unionization wave, leadership
Oh,
changes.
yeah, definitely a lot going on. And those very challenges, those are actually a big part of why we're revisiting the Starbucks story. Going back to those early days, those decisions, the principles that got them where they are, I think that's more relevant than ever.
Couldn't agree more. So buckle up. This is going to be a deep dive into Starbucks, where they started, how they scaled, and those gold nuggets of wisdom we can all apply.
Sounds good to me.
Perfect. So rewind the clock. Starbucks 1.0, the pre-Howard Schultz era, just a bean business. Back then, it was all about three guys, Jerry Baldwin, Zev Siegel, and Gordon Bowker.
And what's interesting from a business angle is their inspiration came from this place called Pete's Coffee Company over in the Bay Area. This guy, Alfred Pete, he was kind of a legend, introduced those high-quality Arabica beans.
Mm-hmm.
Baldwin Siegel, they were in Seattle. They saw what Pete was doing and thought, hey, Seattle needs this.
Spotting an opportunity. Classic.
Exactly. Taking a successful model, adapting it to a new market. I mean, that's a lesson right there. And here's a fun fact. When Starbucks first opened, like in Pike Place Market in '71, they weren't even roasting their own beans. They were getting them straight from Pete's.
No way, really?
Yeah, not a lot of people know that. It shows you their focus was laser sharp on bringing that quality coffee experience to Seattle, even if it meant partnering up at the start. And it really underlines how influential Pete's was, right, on those early Starbucks vibes. Eventually, Zev Siegel, he moves on, leaving Baldwin and Balker at the helm.
So now let's cue the entrance of Howard Schultz in 1982. His first encounter with Starbucks, totally random. He wasn't some coffee guru scouting the competition. He was working for the Swedish company Hammerplast. They made coffee makers, those non-electric ones.
Right, and Hammerplast had this big account with Macy's in Northern California. And Schultz notices something weird. This little Seattle company, Starbucks, is ordering a crazy amount of their coffee makers.
Yeah.
Huge orders. So never been to Seattle, but he's intrigued. Decides to fly up there, see what's going on.
Just out of pure curiosity.
Yeah, and that kind of curiosity, that's powerful in business. You see something unusual, you dig in, you never know what you might find.
In his case, he found a life-changing obsession with coffee. That first visit to the Pike Place store, I mean, he talks about it like it was a religious experience. The smell, the whole ritual, the way they were, educating people about different beans and roasts, it really got to him.
And from a business perspective, what's really striking is that emotional connection. Remember, this is 1982, Starbucks. 3 stores, only selling beans. Their big expansion plan was to maybe open up in Portland. I mean, it's mind-blowing to think how far they'd go from there.
Seriously. And we have to remember, back then, Seattle coffee culture was pretty basic. You had your Folgers, your Maxwell House, a small local chain called Seattle's Best Coffee, Starbucks. They were the pioneers, educating people about, specialty coffee, opening up this whole world of taste and nuance most folks hadn't even thought about.
And that education piece, that's huge for anyone launching something new,
Yeah.
right? Sometimes you're not just selling a product, you're selling a whole new way of thinking about it.
Totally. And what's amazing? Even at that early stage, they started building this, unexpected brand power. Tourists would visit, load up on bags of beans, then ask to have them shipped home. I mean, it was just this organic demand way beyond their little corner of Seattle. Even with all the logistical headaches, it shows the power of a strong product and experience.
Definitely. But here comes the plot twist. 1983, Howard goes to Milan. And this trip, it's a total game changer for him. He sees the Italian espresso bar scene, these vibrant community hubs, and he has this aha moment. This is what Starbucks could be.
You saw a vision?
Right. He saw this cultural phenomenon, this social space built around coffee, and he's convinced America's ready for it. But, and this is key for any entrepreneur, he runs into resistance. Big time. Jerry Baldwin, Gordon Bowker, they're bean guys. They don't want to get into the restaurant business.
They were happy with their niche.
Exactly. And Schultz, he spends the next 2 years pushing advocating, trying to convince them. Finally, they let him open a little coffee bar in their 6th store. Just a test run, you know?
A toe in the water.
Right. And that little experiment, it explodes. Sales skyrocket, blowing past the bean-only model. But get this, Jerry Baldwin. Still not convinced. This fundamental difference in vision, well, that's something a lot of growing businesses face.
Different founders, different ideas about the future.
Exactly. And it all comes to a head a few years later. But before that, Starbucks makes this move, driven by Jerry Baldwin's personal connection. And it has these huge financial consequences. They acquire Peet's Coffee.
The company that inspired them in the first place.
Right. It is more of an emotional decision, really. Baldwin had so much respect for Alfred Peet, wanted to see the company thrive, but it saddles Starbucks with this massive debt load. Their debt-to-equity ratio, like 6-to-1. And that's a big lesson, right? You got to balance your vision with solid financial management.
Debt can be a killer.
It can really limit your options. And this financial strain, well, it creates the opportunity for Howard Schultz to reshape the company. 1987, Baldwin decides to move to California, focus on Peet's, offers to sell Starbucks to Schultz. Price tag, $3.8 million.
Which at the time was a fortune for him.
Absolutely. He didn't have that kind of cash just lying around. So he's got this incredibly tight window to raise the money, like less than 100 days. And for anyone who's ever raised capital, that's insane pressure. You're scrambling, pitching your heart out. Every no feels like a punch in the gut.
I bet. And to make things even more dramatic, just when he's getting close, he finds out another investor wants to buy Starbucks. Cash offer, no questions asked. Talk about a high-stakes poker game.
I know, right? This guy, Sam Strum, he's ready to close the deal right then and there. Schultz's dream is about to go up in smoke. But then this incredible thing happens. Bill Gates Sr., Bill Gates' dad, steps in.
You're kidding.
Yeah. Turns out a mutual friend, this guy Scott Greenberg, told Gates Sr. about Schultz and his predicament. So Gates Sr., he calls up Strum, basically clears the way for Schultz. I mean, talk about the power of networking and having the right people in your corner.
That's wild. And then Gates Sr. and Bill Gates III actually help Schultz secure the rest of the money he needs. Amazing.
It really shows, the power of a compelling vision and those crucial allies who believe in you. So August 1987, the deal closes. Schultz's company, Il Journal, merges with Starbucks, and they rebrand the whole thing as Starbucks Corporation. The original Starbucks keeps Peet's and renames itself Peet's.
Full circle. But getting Il Journal off the ground in the first place, that was no walk in the park.
No.
He pitched to 242 investors to get that first round of funding. You want to guess how many said yes?
50?
Try 25.
Boy.
217 rejections. That's the reality for a lot of founders, right? Rejection is just part of the game. You have to have that, that unwavering belief to keep going, even when it feels like the whole world's saying no.
Resilience, man, that's the key. And Schultz, having seen his own parents struggle with debt, he was adamant about building Starbucks on this, like bedrock of financial responsibility, no debt, which is pretty remarkable considering how fast they were growing.
Yeah, that financial discipline definitely paid off. And here's the thing about the coffee bar business model. The original Starbucks founders, they saw it as this risky restaurant venture. But the reality, it was a cash cow. They had their roasting expertise, they were selling beverages at a good markup, and suddenly they're looking at a gross margin of like 80%.
80%. That's not your typical restaurant margin. And that, combined with those early signs of crazy customer loyalty, people coming back multiple times a week, they knew they had something special, that lightning in a bottle moment.
The price point helped too. I mean, even back then, a cup of coffee was a relatively affordable treat, and people were happy to make it a regular part of their routine.
Right, you don't have to break the bank for a little luxury. And the numbers at the store level were insane. They were seeing new locations recoup their entire investment in under 2 years, sometimes even a year and a half. A 2-to-1 sale to investment ratio in the first year, operating profits over 20%. I mean, that kind of unit economics is what fuels explosive growth.
It's like a dream scenario. And what's cool is they were also super flexible early on. People would ask for customizations and they'd just roll with it. That responsiveness to what customers wanted, that helped build a lot of loyalty.
That adaptability, that's crucial. You got to listen to your customers, iterate, not be afraid to change things up. And there's some great stories from those early days, like the decision to ditch styrofoam cups. That was about being eco-conscious, but it accidentally led to the iconic sip lid. Unfortunately, they didn't patent it.
Oh, what could have been?
Right. And they also, believe it or not, failed to trademark Cafe Latte. So, wins and near misses. But it all taught them valuable lessons about protecting your intellectual property and, paying attention to the little things that can have huge implications down the line.
The devil's in the details.
Definitely. And even things like the cup sizes, that whole Starbucks language. Short, tall, grande.
Yeah.
That came from this guy, Terry Heckler. And writing customer names on cups. That started as a way to keep track of orders when they're super busy, but it turned into this iconic part of the experience.
Personalized touch.
Exactly. So as we hit the 1990s, the focus shifts to building the brand and that, legendary Starbucks culture. Schultz, he's going to investors, talking about community, creating this third place beyond home and work.
A space where people could connect.
Exactly. And it wasn't just talk. You could see it happening in their stores, people hanging out, chatting with baristas. That kind of atmosphere, that's powerful stuff for any business.
Makes people feel like they belong. And after the acquisition, their growth. It goes into overdrive. Remember, the original Starbucks was growing slowly. Schultz comes in, bam, 26 stores in 1 year, over 105 years.
They were on a mission. And a big part of that was seeing the competition heat up. These regional franchises, Gloria Jeans, they were popping up everywhere. They knew they had to move fast to, solidify their position.
Capture the market. And they brought in some key players. Howard Behar, he was all about the culture, that servant leadership approach. He was like the soul of Starbucks. And Orrin Smith, he was the operations and finance guy, the adult in the room, making sure everything ran smoothly.
Having that strong, balanced leadership team is so important when you're growing that fast.
Totally. And I love that they had this tradition of having dinner together every Monday night. Schultz, Behar, and Smith, just talking things out, keeping aligned.
Communication is key, especially when you're moving at that pace.
Right. And what's funny is all this growth, all this success, and their systems were still pretty old school. A lot of paper, not a ton of technology. It shows you don't always need the latest gadgets to build something great. Strong fundamentals go a long way.
The basics are the basics for a reason. So they're growing like crazy, and they have this internal debate about where to expand next. Behar wants to go to San Diego, but Schultz is set on L.A. He understands the power of that market for brand visibility.
LA's a statement.
Exactly. And, it's interesting. There wasn't this calculated plan to make Starbucks a luxury brand. They wanted to be accessible, but high quality. They called it affordable luxury.
That everyday indulgence.
Right. And their pricing, sure, it reflected the quality and the experience. But honestly, a lot of it was just like covering their costs. Schultz, he understood the danger of becoming too ubiquitous, losing that specialness. He always wanted to maintain that intimacy, that trust with customers and employees.
Keep it personal. And their whole philosophy was treat your employees incredibly well, and they'll treat the customers incredibly well. It seems obvious, but a lot of companies don't get it.
Investing in your people, that's not just like feel-good stuff. It's good business. And remember their Beanstalk program, offering stock options to all employees working over 20 hours a week. Back in 1991, that was unheard of.
Way ahead of their time.
And they were giving employees 14% of their base pay and options, a year before the IPO. It shows how committed they were to sharing the success. And they were also early adopters of offering health benefits to part-timers and domestic partners back in '88. I mean, that was way before it was common.
Really progressive for the time. And the return on those Beanstalk grants, astronomical. By the time of the acquired episode, they were worth like 800 times their original value.
Life-changing money for a lot of early employees. It really shows how aligning employee incentives with company success can create win-wins for everyone. And you can see the influence of companies like Costco on their thinking. Jeff Brotman, one of the Costco founders, was an early Starbucks investor and board member.
Right. Costco's known for how well they treat their employees.
Exactly. And speaking of partnerships, there was actually some resistance internally to putting Starbucks coffee in Costco. But that ended up being a huge success for both companies. It expanded their reach, drove traffic to Costco, win-win.
It's like the right partnerships can unlock so much potential. And Schultz was always talking about this idea of finding little billboards everywhere. So they partnered with United Airlines, Barnes & Noble, smart moves.
Getting the brand in front of the right people.
Absolutely. And you know what's crazy? Jeff Bezos and Jim Sinegal, the Costco CEO, their first meeting was at a Starbucks inside a Barnes & Noble. Just a random fact.
A little piece of history. So they're expanding, but they're being really strategic about it.
Yeah.
Going market by market, making sure they can keep up with the growth.
Yeah.
Except for Boston. They kind of jumped the gun there because of the acquisition of the Coffee Connection.
Which ended up being a pretty good deal.
Oh, yeah. Not just for the locations, but also because of that little thing called the Frappuccino.
Yeah.
Even though Schultz initially hated the name,
He came around, though.
he did. And the rest, as they say, is history. But it's a good lesson about being open to things even if they don't initially appeal to you. Sometimes the market knows best.
So 1992, the IPO, a huge moment, not just for Starbucks, but for, like, the whole coffee industry.
Going public was a big deal for Schultz. He wanted that validation, that legitimacy for the company.
And some sweet, sweet cash, right?
Of course. But they only had a few quarters of profitability under their belt, about 130 stores.
And they actually got turned down by Goldman Sachs for the IPO.
Imagine that.
I know. Shows you even the biggest companies can face those early rejections. And at the time, there was no other publicly traded coffee house chain to compare them to. So investors were kind of taking a leap of faith.
Big time. But the IPO goes through. $17 a share, jumps to 21 on the first day, and boom, they're a $250 million company. And those employees with bean stock.
Instant millionaires.
Pretty much. And it's cool that even from the very beginning, they had this thing about lowercase titles for everyone, no matter your position. Showed respect. And the management team, they owned a big chunk of the company post-IPO, about 18%. Schultz himself had 9 or 10%. Their incentives were totally aligned with the long-term success of Starbucks.
They were all in it together, so they're conquering the West Coast. Where do they set their sights for East Coast expansion?
Washington, D.C.
Maybe because they were already doing a ton of mail order business there.
Could be. Makes sense to go where you already have some traction. So they hit 500 stores in '95, acquired Coffee Connection, and remember that Frappuccino Schultz wasn't a fan of. Well, they reformulate it, embrace it, and it becomes a monster hit.
Proof that sometimes you gotta go with the flow.
Adapt or die, right? And then they partner with Pepsi to launch bottled Frappuccino after Coca-Cola turns them down.
Always gotta shop around.
Exactly.
Yeah.
This guy, Craig Weatherup at Pepsi, he was instrumental in getting that deal done. And they actually had an early recall of the bottled Frappuccino. Pepsi took full responsibility, which is, huge when it comes to maintaining trust with a partner.
Strong relationships matter. And that bottled Frappuccino, it just like exploded their brand awareness. And then you had that random Starbucks cameo in You've Got Mail.
Free publicity. But through all this success, all this growth, they had to constantly make sure they weren't, getting ahead of themselves.
It's not sacrificing quality.
Exactly. Schultz has this great quote, "Growth covers up mistakes and success breeds hubris." It's a warning for any company that's scaling fast. And maintaining that third place feeling when you're becoming ubiquitous, that's tough.
It's like walking a tightrope.
Yeah.
So let's talk about technology. The late 2000s, Starbucks launches their mobile app, a total game changer.
Right, and this was driven by these two guys, Adam Brockman and Stephen Gillette.
Visionaries.
Totally.
Yeah.
Schultz even admits he didn't fully grasp the potential at first. But they knew it could make things easier for customers, and they went for it. But there's a flip side to all that convenience.
The app started to kind of erode that third place vibe.
Yeah, it shifted the focus to transactions, created this congestion in stores.
I've definitely been in a Starbucks where it's like mobile order chaos.
Exactly.
Yeah.
And even after Schultz stepped down as CEO in 2017, he reflected that maybe they hadn't invested enough in the tech and operations to handle this explosion of mobile ordering.
It's like technology can be a double-edged sword.
Right. Schultz even called the app a potential Achilles heel if it's not managed carefully. You have to balance innovation with preserving that core customer experience. But on the plus side, those gift card balances on the app, that's a lot of cash flow for Starbucks.
It's like they're a mini bank.
Right. So yeah, unintended consequences, but also some unexpected financial benefits. And Schultz has said he might have approached the mobile ordering differently, maybe not allowed ordering so far in advance.
Interesting. So, shifting gears to their real estate strategy, from the beginning, they were all about those prime locations, corners, high-traffic areas, near grocery stores, offices.
Every store is a billboard. That was their motto.
Make a statement. And they were also adamant about not franchising. They wanted control over the culture, the experience, unlike, say, McDonald's, where it's more about a consistent product.
Different approaches. But as Starbucks grew, they realized that successful locations could be in more unexpected places too. So they adapted their real estate strategy over time. Flexibility is key.
Now let's talk about China, a huge market for Starbucks. And their success there is really a testament to this amazing woman, Belinda Wong.
She gets it. She understood that they couldn't just copy-paste the U.S. model in China. They had to localize, empower local leaders to make decisions. And her values-driven approach, like getting government approval to provide health insurance for the parents and grandparents of their employees, that's going above and beyond.
Really impressive. And it's not just China. There's this deep sense of humanity that seems baked into Starbucks from the early days. Remember the story about Tom Carrion, the store manager who had AIDS?
Yeah, back when there was a lot of stigma around the disease, Starbucks supported him, no hesitation. It's those kinds of actions that speak volumes about their values.
Actions speak louder than words.
Exactly. Of course, they're not perfect. They've made mistakes.
Yeah.
But Schultz always comes back to those core values: compassion, empathy, love. He sees those as fundamental to their success.
Building a business with a heart. So the past few decades have been a bit of a roller coaster. Leadership changes, Schultz coming back as CEO, then stepping down again, Kevin Johnson taking over, then Laxman Narasimhan, and of course the rise of unions, which has been a big challenge for Starbucks.
A complex issue for sure. And Schultz has spoken about his, personal feelings about it. He's always seen Starbucks as this company that values its employees. So seeing this push for unionization, it was unexpected for him.
Yeah, a lot of soul searching, I'm sure.
Definitely. But he's clear that the focus has to be on the partner in the green apron. That's his term for the employees. He believes if they take care of their people, the rest will follow.
Happy employees, happy customers, happy shareholders.
Exactly. And the scale of Starbucks today, it's mind-boggling. $36 billion in revenue, over $4 billion in profit, 450,000 employees, 39,000 stores in 86 countries. They're everywhere.
A global empire. And they're not slowing down. They finally opened in Italy, the place that inspired it all.
Right. Schultz always said they had to earn the right to be there, make sure they were representing the brand at the highest level.
Respecting the roots. And then there's the roastery concept. Schultz calls it his most entrepreneurial, creative project.
Those roasteries are something else. Super immersive experiences inspired by, get this, Willy Wonka and the Chocolate Factory.
No way.
Yeah. There are 6 of them now. Seattle, Chicago, New York, Tokyo, Shanghai, Milan. They're expensive to run, but they're these amazing brand showcases, pushing the boundaries of what coffee can be. Even Bernard Arnault, the luxury goods tycoon, visited the Seattle roastery. That says something.
High praise indeed. So let's wrap this up. Why did Starbucks work? What are the big lessons for anyone building a business today?
Okay, first, they took a commodity, coffee, and turned it into this premium brand, an experience people crave.
Added value.
Exactly. Second, they invested heavily in their employees. Great pay, benefits, stock options. That led to exceptional customer service and low turnover.
Treat your people right.
Absolutely. Third, strong store-level economics. They were making money hand over fist, which allowed them to scale quickly without drowning in debt. Fourth, strategic real estate. Every store was a billboard, carefully placed for maximum visibility. Fifth, smart partnerships. United Airlines, Barnes & Noble, Pepsi.
Leveraging each other's strengths.
Right. Sixth, they created the third place, this space for community, connection that resonated with people on a deep level. Seventh, Schultz's vision and passion. He was the driving force, even though leadership transitions are always tricky.
Founders leave a big footprint.
They do. Eighth, caffeine. Okay, maybe that's a bit tongue-in-cheek, but let's be honest. Having a product people crave doesn't hurt. And finally, they were always innovating, adapting cold drinks, frappuccino, mobile ordering.
Staying ahead of the curve.
Exactly. But it wasn't always smooth sailing. In the summer of 2024, Schultz sent this letter to the current leadership and board. He was worried about the direction the company was heading in, a potential drift towards mediocrity.
Even though he wasn't directly involved anymore, he still cared deeply.
He did. And his letter, it was basically a plea to get back to basics. He had 2 main recommendations. 1, remember that Starbucks is a coffee company serving people. Focus on the coffee, the human connection. 2, the mobile app is a runaway train. It's too much, too fast. It's hurting the in-store experience.
Words of wisdom from the OG.
Yeah.
So as we close out this deep dive, I think the overarching lesson is building a lasting business takes more than just a good idea. It's about understanding your market, prioritizing your people, having a strong financial foundation, and constantly adapting while staying true to your core values.
Right. And it's clear that Howard Schultz, even though he's stepped back, his passion for Starbucks, his belief in what it stands for, that hasn't faded.
It's his legacy.
It is.
So as you think about your own business, what's the most important thing for you to cultivate, to protect as you grow? What's that balance between innovation, your values, and creating an amazing customer experience? That's something for you to ponder. Thanks for joining us for this deep dive. We'll catch you next time.